Well, let's now turn to the advisory and strategies to boost your superannuation, including setting up a self-managed super fund. Joining us is Jaeneen Cunningham, behavioural finance coach and credit advisor at Etairos Finance. What are some of the tips then, I guess, we can use in terms of using the cash to accelerate your super?
I think most people don't really look at their super. They sort of think it's sort of like years away. And I think with the way property is at the moment, people are actually looking at wanting to have control of their super and buying whatever they want. And usually that is property inside their super. Some of them can't afford to buy property outside and live in their properties. So this is just something that actually has taken over with looking at using your super as a great deposit to buy a property, which could be, minimum $1 million.
You also talk about collaboration perhaps with other members. What do you mean by that?
So everybody has their SGC, their superannuation guarantee, which is 12% that goes into their super, which usually is a retail fund or a industrial fund. To set up a self-managed super fund, you can actually have 6 members in there. So you could collaborate with your partner, brothers and sisters, mother and father, workplaces, people in the workplace. We actually have some young people joining together, 6 of them together, joining forces. So if they've all got $50,000 each, that becomes a nice deposit to use to purchase a property that they probably couldn't have purchased with just their 50,000.
Okay, but it's not just about buying property. I mean, what else, what are the other considerations you need to make, I guess, particularly when you're sort of approaching retirement?
So a lot of people can buy shares. Some people like to buy shares in certain areas, like, I don't know, maybe olive trees or something like that. And a lot of people buy gold and silver. That seems to be really popular at the moment. Or you can still buy shares and managed funds. You can buy ETFs, which is a platform of buying a whole heap of shares in organisations that you may not have been able to do. People buy art. Some people have, bought cars, like I don't know, Peter Brock's car. But of course, you can't be driving it. It has to be encased in a garage, and it's sort of there to increase in value, not for your pleasure for the moment.
Well, I mean, you're talking about those alternatives perhaps in terms of investment. I mean, clearly you need to get good advice as to, what to buy.
I guess, yes, we recommend that people go and get advice, but it's not the law. You don't have to. And most people who are doing self-managed super funds, they are self-directed. They might have an inkling to buy something within that fund that maybe others can't, like property. If you want to leverage, say, commercial property or a residential property, you can get advice from people like us. We're credit advisors in understanding the costs associated with that, how you borrow, because it's very different from actually buying a normal investment property.
Jaeneen, are we still at that point where, particularly I guess young people who might have been working for a while, still don't take super seriously? And it's one of those issues, you deal with it when you're close to retirement. Don't need to think about it now. Don't even look at my super.
Yes, that's true. What's very interesting is we're getting lots of 30 to 35-year-olds, millennials, actually contacting us saying, what can I do with my super? I don't understand it. Can you teach me how to read the statement? What have I got in there? What's the insurance? What are the fees and charges? And what are my options? Because they've heard about self-managed super funds. So I just did one today, collaborating with 2 young ladies, and they're joining forces to set one up because they actually can't afford to buy a property. Looking at that now, there's much more interest in them because they're saying, well, there's all this pot of money in my super. What can I do with it now, rather than waiting until they're older. And I think the thing is, with this generation of millennials, it's a great opportunity for them to look at their super now at this age, whereas my generation, they're getting to the end of their working life, and they're realizing actually I don't have anything in there or not enough to retire, they should have been looking at it when they were 30. So it's quite interesting. The young ones are actually looking at that now and asking the question, what can I do with it?
And of course, there's also that consideration of whether you manage your own super in a self-managed super fund. What do you need to consider if you go down that path?
Yes, it's not for everybody, and you really have to be able to understand it to get some support and guidance as to what are the rules and regulations with the ATO. There's an act, the Superannuation Act, that goes along with it. So you can only buy certain things. You can't go and buy a property and then add on an extension, at the top of it, or put a granny flat there. There's certain stipulations. So you really do need good advice, understanding how to set it up and what you put on the contract. When you purchase a property, it's not like you would normally buy an investment property. It's very specific as to what has to go on the contract, or it can cost you a lot of money. You don't just put a 7-day finance clause on there and want to settle in 7 days. It takes time. So the finance clause and settlement date is a bit more extended. And then there's compliance associated with it as well. So understanding how to do it, the tax return, the audit. So there has to be enough money in the super fund for you to have some liquidity in there to be able to use those funds to pay for the compliance.